Hello and welcome to another TheTraderGuy.com video, and in this video we are looking at the upcoming July 15th Forex session. And the reason why July 15th is important is that it is the day that the European stress test of the banks, the results come out. And as such, we can look around the horn and try to figure out what the market thinks is going to happen. When you look at the Euro USD, you can see that clearly we are in a position that the euro found massive support at the 140 mark, and then the next day shot up like a rocket. Of course, let us not forget that this move was an impulsive move because of Ben Bernanke's seemingly willingness to be open to the possibility of more quantitative easing out of the United States. That, of course, sold off the dollar against everything, including the euro, which had already found a little bit of a bid for support, so it's not a big surprise that it rose from there. Look at the way it had fallen. Now, on Thursday, the day before, we get a candle that is red, but is stopping at a minor support and resistance level, which I'm calling 141.50. This isn't a surprise that it would find a little bit of support here. Now, the question is, does this look good for the euro? Looking at this chart by itself, you could say, yes, it looks like it could find a little bit of a bid here. But let's look at the bigger picture. Bigger picture is that we do have lower highs forming. Some people would go as far as to say that perhaps we are forming a flag as well. I have a hard time believing that, because if that's the case, then we're looking at about a 2,000 pip move from here, which is us about 165. Not an impossibility, but fairly unlikely with all the issues surrounding European debt. So, looking at that, we understand that it does look relatively supportive for the euro against the dollar. But is it an anti-dollar move or a pro-euro move? When you look at the euro against other currencies, it becomes very obvious that the euro USD move up is an anti-dollar move. Not a big surprise considering what Bernanke had to say. But when you look at the weakness, as we are currently basically testing the lows of the euro-Swiss pair, and look at the way it's fallen, not a big surprise. Looking at the euro versus the pound, kind of a similar situation, not in the sense that it's testing all-time lows, but it is testing the lows of some major trading ranges that it's been in recently. The fact that it's at the bottom of this 88 zone, which I have pretty much pegged as a pivot of sorts, if we break below the 87.50 or so, we could see a retest of this low pretty quick, perhaps even lower. With the markets waiting for the announcement out of Europe of the stress test, it looks like perhaps the euro is prepared to sell off. You can also look at it in relation to the yen. Notice how it wasn't much of a range, but it is a red candle, and we are through the 113.50 level, and it does appear that the pair does want to go down. So when you see a chart like the Euro USD the day before this announcement, and it looks like it's supportive, one of the best things you can do is look around the horn to see how the euro is faring against everything else. This chart is deceiving because it isn't necessarily pro-euro, and if it goes up, it's not necessarily going to be pro-euro, it's going to be anti-dollar. So what that means is that even if the euro falls against the dollar, it will fall much more slowly than it will against perhaps the pound or the franc or the yen or other currencies that may be liked a bit more. Perhaps the euro versus the Canadian dollar. Perhaps the euro falls against the Canadian dollar a lot harder than it does against the US dollar. This is one of the biggest little tricks, if you will, about currency trading is you have to marry up the strong against the weak. You want to sell the weak and buy the strong. Too many people get caught into this singular chart mode and say, hey, look, this looks like it's going to hold a support, but if it breaks, they're willing to sell this chart. Not that it's the wrong, or not that it's a bad trade, but it's the wrong one to maximize your returns. When you see other trades that don't have as much support sitting underneath it, they have much more room to fall. If you have any questions, please feel free to email me at chris@thetraderguy.com.